Hello everybody, welcome to TraderMerlin Show. It is your hump day. It's Wednesday. Hope you all did something fun out there today. Probably the about face of the equity markets was fun for many of you. Forgot to mention, yesterday I actually did add, oh, there we go. Corey's rocking in the background. I did add to my short yesterday right near the close, so I wasn't too happy about the way we ended up today, but we will maybe talk about that a little bit later on as we progress through today's show. Now, you guys may have seen the graphic that I put up. Let me see if I can bring it up here. I posted something on social media talking about a term which you may have never heard before, and that will be the topic for today, which is FusionVesting. Joining me from Traders Army, we have none other than Mr. Corey Lane joining us. Corey, how you doing?
What's up, my friends? Good, Merlin. How are you doing, buddy?
I'm good, man. It's another happy day out here in Southern California. Did you enjoy those thunder and lightning storms the other day?
My gosh, dude. We've had now 2 of them now in the last month, right? And I filmed last night. The first one I didn't catch last month, but it reminds me of when I grew up in Florida, Orlando, and we got that stuff, every day at 3 o'clock in the afternoon. You can set your watch by it, but I never see it out here, and it was amazing the way the clouds light up around that lightning. It was outstanding.
Oh, yeah. It's funny because there was one moment where my dog for the 4th of July, he's the biggest wuss in the world. Like, a firecracker goes off and it's like, somebody shot him. He goes and cowers in the corner. But when the thunderclap was hitting so heavy, he's bolting outside, all aggressive, barking. It was entertaining to watch, nonetheless.
I love it. I love it.
Let's get into the topic du jour. We got a lot of stuff we could talk about today, but I want to kind of address. You're doing an event, which we'll talk about, and we'll let you guys know about this event you can attend for Traders Army. But Corey can be talking about something called FusionVesting, and of course, it may sound foreign to many of you. So walk us through a little bit about what this is and why it's important.
Yeah, so FusionVesting, by the way, we're going to go deeper into it in our event that we're having this week, which we'll talk about. But FusionVesting is, people always ask us, at Traders Army, you and Chuck started this thing a few years back. Chuck Fulkerson is who I'm talking about. And people are like, well, what differentiates you from anybody else? What do you do different than anybody else? And I think one of the biggest things that I've learned in my 15 years of trading is, I don't know, almost 16, I guess, is that there isn't one analysis style that just works all the time the best without its flaws. I think you would agree with that, right?
Yeah,
Merlin?
absolutely, yep.
And so every school that I ever took a class from or every academy I ever taught for was very big on this one style of analysis is the best, it's all you need. And everybody seems to do a really great job out there at poo-pooing all over all these, conventional technical analysis. It's great for, it's got all these flaws and it only has this one little thing that works. And, just fundamental analysis. Oh, here's why it doesn't work. And here's why supply and demand is the best. And then somebody would say, well, here's why using market profile and volume is the best. And the reality is, I get that that's kind of a marketing thing, like they're trying to use that as a differentiator. But the truth is, there is really great quality stuff that comes from every aspect of analysis, especially when you come to the idea of chart pattern analysis. And there was a period of time where I started to really kind of buy into that whole idea of supply and demand analysis is all you need. And I kind of ditched a lot of the conventional technical analysis, support, resistance, indicators, I kind of ditched it.
Yep.
And because the logic behind supply and demand analysis made perfect sense to me. I'm like, oh, that's why this stuff in conventional technical analysis was failing me. But then when I came over and I started to do just strict supply and demand analysis, I found that, man, there's even flaws there. And I started to go back to some conventional technicals, and I'd flip-flop between the two. And what I then discovered is there's a place for all these different types of analysis that can blend together, hence the name FusionVesting, right? So whether you're using this on a smaller time frame for trading or a larger time frame for investing, we do appreciate the stuff that really, really works, and we shouldn't abandon in conventional technical analysis, support resistance.
Mm-hmm.
And for those who say, well, supply and demand alone doesn't work, well, in my opinion, I would agree with that. That's why we have to use other styles. And then, of course, I started learning more over the past few years about what's called fair value areas, fair price value areas. And I've never even really studied about that too much. But using these three types of analysis has really started to improve my overall, call it win ratio, success ratio, just understanding of how order flow works.
Right.
It's allowed me to position myself and my students and members, and Chuck as well, that it's allowed us to position ourselves for both the opportunity to catch reversal trades, pullbacks into quality areas of demand or supply, but breakout opportunities using conventional support and resistance. And the flaws that exist within that, methodology. So FusionVesting was born as a result of that, because to say all of that to somebody is not a 30-second elevator pitch when someone asks you what differentiates you.
Right.
Now we can just say, hey, FusionVesting. We've used multiple styles of analysis to tip the odds in our favor even more.
When I was writing up the description for today's show, I kind of brought it to food. You look at some of the best foods out there right now, and they take a little piece from this culture. So you got some Thai spice, or maybe I've got the the Italian seasonings, or I've got you cherry pick the pieces that work. And I think when we look at, you're right, when I go to these trade shows in like Las Vegas for Traders Expo, which I've encouraged my viewers, never bring your wallet there, right? Never bring anything that you could spend money, because you will find some guy is going to say exactly what you want to hear and sell you a bunch of crap you just don't need. But usually it's that one trick pony that they're trying to sell you. And, if you use one trick, fine, it might work. But I think everything else becomes a probability enhancer. And if we're looking at it from a probability game, which everybody should be. I saw Brendan here say, what did you say here? Yes, he's talking about gambling. Where did it go? Brendan's moving up quick. He says, I gamble strategically. Look, we could say what we're doing is throwing darts. But when you start to add on things that say, this gives me a higher probability that's going to move up. For example, buy something that's, bouncing, it's above its 20-period moving average. May sound stupid, it's lagging, but you know what? That's telling you and confirming it's in a trend. I'm looking to buy something that might be an extremely oversold situation into demand. Okay, great. I'm using demand plus oversold. So the more layers of probability we can put on a trade, in theory, the higher probability of success we're going to have on that trade overall, correct?
And I 100% agree with that, and I found that to be true. I mean, for the longest time, I took all the indicators except for my implied volatility indicator off the chart because everything was lagging. But as you just said, it's just a little extra confirmation. I had a really fantastic trade last week, actually the past couple of weeks, on stocks bouncing off their on their golden crossover, right?
Oh,
golden cross.
Yeah, it's funny because
textbook.
Yeah, I'll bring up the chart here. I'm like that too. It's funny. I used to work with early on. I traded a guy named Kevin Green, and we actually took a screenshot of his screen. It might have been his or someone else's, but it had on one chart, guys. You had stochastics, Bollinger Bands, MACD, RSI. You had volume, and you had moving average lines. And there were so many things on the chart. You're going, I don't even know what price is. And for those that follow me, I mean, you guys know I like simplistic. I actually like looking at just pure clean charts like this. Basically, I want candlesticks and I want volume bars. And some people don't even want volume bars. I can turn that one off real easy. But to me, it's about looking at price itself and making the decision. Now, Corey just mentioned that he likes to use certain indicators, and I do as well. I got to say, I am definitely an indicator fan to a point. The point where I start to become anti-indicators for everybody is when you start saying this indicator is going to make my trade for me. That's when I have a problem, right? When you say, like Corey was just saying, we got the golden cross. The 50 crossed above its 200-period moving average. I got to buy. No, you're already probably 6 weeks late on that one, right? So it's more about looking at the price and then analyzing it to the indicator support and move on from there. Yeah,
and I would agree with that. And I'm very much about a clean price chart as well, Merlin.
Mm-hmm.
Anything that is an overlay type indicator on top of price, I think that whether people admit it or not, your focus starts to become more so the overlaying indicator, even though you think you're focusing on price. And
right.
So, Bollinger Bands and moving averages and all that stuff, they're not on my chart always, but if I need a little bit of extra confluence or confirmation, or I just want to see where those tools line up, that's always like a cherry on top or an icing on the cake. It'll never qualify nor disqualify a trade, which is why I never really have it on the chart to start.
Mm-hmm.
I do have some lower indicators that I keep on there. As an option trader, I need to know where my implied volatility is. I do like MACD for a little trend divergence or convergence. And I've been using a highly modified, probably a deep modified CCI in conjunction with support and resistance for breakout trades. And that's been working really, really well. Somebody asked earlier in the chat box, Jimmy asked, does Corey have any favorite indicators? And yeah, I have those. That's about it, though.
Yeah, and those. It's funny because CCI, is Commodity Channel Index, guys. It's a very old indicator, been used for many, many, many years, and you can tweak any of these. And as I said in the past, I have a tendency to not tweak them simply because I want to be looking at an indicator that everybody else is, because the assumption is that most retail traders are wrong, right? They're going to be on the wrong side of things. So if they're reacting to specific indicators, I want to react to the ones that they're reacting to. And normally that's going to be the default. What Corey said about adjusting CCI, that's fine because he's looking for extremes, right? If you understand how CCI is, it's an oscillator that basically will give you clues as to when things are extremely overbought or oversold. And stretching that out just increases the extent to which something is overbought or oversold, correct?
Well, actually,
you use it different.
Yes. I actually do use it slightly differently. So the modified or the standard setting on CCI, like most indicators, is looking back 14 periods.
Right.
I found that by changing it from 14 to 100 periods, now you're looking back half a year almost, and what CCI is measuring is sort of a relative strength, type. It's looking at it's looking at the strength today versus the strength of those candles over the last 100 days.
Yep.
And what I have found is accompanied with a proper breakout setup. So a proper breakout setup for me is I use conventional technical analysis, right? And you'll probably understand this, Merlin, where it says, hey, the more times price hits resistance, every textbook on the planet will tell you the stronger it is. But I think if you look deep inside the supply and demand of that, we realize that the more times a resistance or support level is hit, the weaker it becomes,
right.
Particularly after 3 or 4 touches to the same price level. If price keeps banging its head on that ceiling, it's more likely to break out than it is to reverse continuously from that area.
Right.
And so when I see something that's come up, 3rd time, 4th time into resistance, and I see price basing in that area, I know that the price is building energy for a breakout. Well, CCI helps confirm, just like price will help me confirm if this thing breaks out, is there room for the market to run higher, or is this going to break out right into some, fresh supply?
Right.
If there's room for the market to run higher, CCI modified to 100 periods tells me if that thing has legs to run.
Mm-hmm.
Right?
I like that.
And so it's showing if it's showing greater relative strength today using CCI. Now I don't use RSI because RSI is down by 100 and 0. CCI is not bound by anything. So you can see CCI peg above positive 100, go to positive 150, positive 200, positive 500. And if this market, if whatever stock I'm looking at or whatever futures contract I'm looking at has the legs to move on this breakout, then CCI will help confirm that for me. And it's I can certainly show that. Koja asked, can I show us the CCI chart? I can certainly show you that. I have to do a little screen sharing here.
Sure.
Which I do.
Funny, I was going to show it on my side, but I'm too cheap to pay for a TradingView account, and my and TradeStation is playing hardball with me, so I'm not showing TradeStation anymore. So I only get a certain amount of indicators. So if you can share, Koja would love that, I'm sure.
Yeah, I would be happy to share. So I'm not going to share my whole desktop because I don't know how this would look. Merlin, I bought a 49-inch ultra wide monitor yesterday.
Wow, very nice.
This thing is massive, but I don't know what it would look like if I shared the whole screen.
Yeah, I think you can just share one.
I'm going to share the application.
I think that's what
I'm
you
trying to do, which is not what I'm used to doing. So you should be able to see Thinkorswim, right?
Yep, I see it.
Right. So kind of as a for instance here, here's my CCI down at the bottom. Okay, and so you can see I've modified it from 100 period, from 14 periods to 100 periods, which again stretches everything out. This is the diamond, so it's just the chart that I had up. And CCI has these boundaries, positive 100, negative 100, and in a typical use, you'll find that this is supposed to be overbought and above positive 100 or oversold below negative 100. And I don't really pay attention to CCI at all between negative 100 and positive 100. Anything in the middle, I don't really care about. What I care about is this thing actually breaking out above positive 100, showing strong relative strength compared to the past 100 days. And you can see that even the last, well, actually, I don't like this one as much. This would not have been a great entry, even though you can see that price pegged right above positive 100. And by the way, this thing stayed above positive 100 for weeks and actually moved, a pretty healthy amount. But a really proper breakout setup for me is kind of in this area right here, right? Where you had multiple tests, you got some resistance, it's basing up in this area. Whoop, let me kind of zoom in here. It's basing up in this area, and then we get the breakout. Well, any reading above positive 100 on CCI down below tells me this thing has legs to run. It's one thing to say that, hey, I want to run a marathon and I've got plenty of room. There's nothing blocking my way. But there's a whole nother thing that says, yeah, but do you have the energy to run? Do you have the stamina to run? Can you actually make it?
Right.
And CCI helps me that says, yeah, you know what? This thing has the energy to run. It has legs on it. It's rested. It's breaking out to, above a prior area of resistance in a strong way, and CCI is confirming that it's got the stamina to run. And, I don't just take it for what it is and just say, hey, anytime CCI is above positive 100, buy. It has to be coupled for me with a proper breakout setup. CF was kind of another example of that the other day, right? CF, which is CF Industries Holdings, which has been a hot sector lately. Strong rally, right up into an area where multiple tests of resistance back here. Basing. CCI was telling me, man, this thing's got some stamina to go. And wouldn't you know it, man, this thing just took off. And that's a proper breakout setup. Now, it didn't make it quite to target just yet, but this is one that I believe will have no problem hitting target based upon the strength that it is showing. And to answer Margaret's question in your chat box, because Merlin, I watched that too.
You're better than me, jeez.
I do. Why not use RSI? It's so popular. It's funny when I ask about, hey, what is your, if I'm at a restaurant and I say, hey, how's your, what do you call it? Whatever meal this is. How's this? And when they say, oh, that's really popular, I said, I didn't ask if it was popular.
I want to know if it's good, damn it.
I want to know if it's good.
Right.
Popular doesn't necessarily mean it's good. I would agree with you that RSI is popular. But my problem with RSI is it's got boundaries, 100 and 0, and it can't go beyond that. The reason I like a MACD so much, the reason I like a CCI so much is that there's no boundaries above 100 or below negative 100. There's no upper and lower boundaries.
Right.
And RSI can give, much like stochastics that has boundaries as well, it can give some false readings because something that is overbought, according to RSI, how many times have we seen something on an RSI that says overbought? Right. And for the next 6 weeks, it becomes more overbought, like a lot more overbought. But RSI will never give you that indication that there's actually room, that this thing has stamina to run. And that's why I really love the CCI for that reason. It shows me what has stamina and what is kind of tired.
For those that just know, RSI it's really looking at the average up moves versus down moves. It's looking at those relationships, so up candles versus down candles, and gives you a comparison of how strong they are, up versus down. CCI is really more in comparison to its moving average. So again, if something's on a strong trend, CCI can remain in a strong trend for quite some time. Generally with RSI, you get much more, I would say, fluctuations in the price movement of RSI, where CCI is a little bit more, I would say, fluid.
Yeah. And by the way, you're right. This is a beautiful demand zone, Jerry. A little pullback to that would be ideal. That's another trade we have set up in the room.
There was another comment there saying zoom out, but I think you kind of already did that. You don't usually see, when Corey's talking about 100 and 200 on, CCI, those you start getting up higher than that, then it really becomes extreme. Like, you don't usually see it get to 500. I mean, that is a very, very overextended or hyperextended type of move. Even getting to 200 for many is like, oh, that's way extended.
Yeah, it's definitely pretty extreme. Certain sectors right now, like the energy sector as a whole, the resources as an industry, have just been very strong. And so, I mean, I could go from chart to chart and show example of breakout. CCI says room to roam, and this thing moved, 10 points in 6 days.
Right.
You know what I mean? I'll grab 10 points in 6 days and be done. You know
Absolutely.
what I mean?
Absolutely.
Why not? So
there's a lot of, talking about this FusionVesting. It's interesting because even using something like CCI, folks, there's a lot of different ways to use this. So you could use it the way the indicator was built, or there's also, looking for convergence, divergence pieces, all of which I think helps. And I saw that Jerry's like, okay, thanks for the input, Corey, on CCI. I'm not a big fan of indicators. It's not that you have to be a big fan, but I think it's important that you just understand what they are, right? And again, there's thousands of indicators out there. Most of them are crap. Most of them take somebody's old school thing and just tweak it by one number or two numbers. Now they make sure it's all, it's theirs, and they put their name on it, and now they're famous. I think when we look at these indicators, whether it's stochastics or RSI, CCI, I notice he's got, got MACD on there and a couple of proprietary indicators. All of them have merit. It's just we have to know when they're wrong, right? And it's just as important as saying, hey, this indicator is no longer working. It's just as important as saying it's working for me. And I think that's the problem most people fall into is they read, one of these many books I've got over here for the CMT, technical analysis for trends and technical analysis for the stock trader, trading systems and methods. It's all the same regurgitated garbage that we are led to believe. And as I've learned, everything works until it doesn't. And in the markets, that changes quite regularly. So whether you're using these indicators, you have to be very quick to adjust, to adapt, and maybe discard that indicator and go, nope, right now I know it's giving me a false signal because price is telling me something else.
Yeah, exactly. Like MACD, I love it, but it's a horrible indicator in a flat market. It tells like moving averages. They tell you absolutely nothing. Right. CCI doesn't tell me anything in a reversal or in any sort of reversal trade. So you're right, Merlin. It's knowing when to use them. It's like I go out to my garage and I have tools hanging all over the place. They're all great, but I'm not going to use a hammer for a plumbing project. But I'm damn well going to have a hammer there because I'm going to use a hammer to build a skateboard ramp for my kids. Or maybe.
See, Corey's old school. He uses a hammer. Nobody uses hammers anymore, buddy. He's a nail gun. I got a compressor and nail gun if you need it. I'll save your elbows and hands.
I got some of those too, but just shoot your eye out, kid.
Just shoot your eye. Before we cut back to you, throw up the SPY on there. Karen says, I'm wondering what CCI is saying about the S&P today, or the ES. Does it have room to the upside? Karen, are you long on the S&P right now? Is that what you want to know?
We actually had a couple really great short positions off of this supply area this week that hit target one. But CCI, if you're looking at that, it really doesn't tell me much right now. Why is that? Because A, it's in the middle of the range. Remember, I don't look at it anytime between negative 100 and positive 100. So this area right in the middle, I find it that I don't use it at all, number one. Number two, it's got to be coupled for me with a solid breakdown setup. So I'm looking for something that has hit multiple times. Like, let me give you an example that we're going to show folks this week, right? So this is Dollar General. It's just a slide, right? Mm-hmm. So I look at this and I see touch after touch. Oh wait, you probably can't see that because it's a PowerPoint.
Oh, that's I'm still on your S&P.
Yeah, that's exactly right. So let me just pull up the chart of Dollar General. So here's the chart of Dollar General, and we traded this a couple times in the trading rooms. Get a little more time on this, but it was this breakdown setup was perfect setup because it was support, and I think most of us would probably agree that the more times support is hit, the weaker it becomes, not the stronger. And so when we get this basing in this area, it tells us that there's no more demand, otherwise prices would be higher. And the confirmation is we get a breakdown, and notice how CCI on the far right is now also breaking below negative 100. Mm-hmm. So not only does this thing have room to fall before it runs into its next area of support down here around 191, CCI below negative 100 now says you go. Right. Now's a great time. This thing has the stamina to run lower, and a little quick drop Quick reversal back to that supply gave us another reversal opportunity, but the SPY doesn't give me that same breakdown setup. It doesn't give me any basing at a support level that's been hit 3 or 4 times. It's just kind of sloppy, choppy sideways. And so I'm not going to use the SPY as a breakdown setup, nor as a breakout setup. And so CCI, at this point, I can take it off my chart. I'm not even bothering with it because I don't have the right chart set up to look first.
Mm-hmm.
Does that make sense? Hopefully?
Yeah, I like it. And for Karen out there, I'm looking at it over on my side too. It's funny because I'm looking at Corey's charts versus my charts, and how we mark things up. I mean, I'm going back. There's Corey's. Corey's got a few more lines on it. There's mine. We're almost identical. I think we're both looking at that on the SPY right around that 425 mark as being that next stop. And we almost came down to it. So if you look at things like that CCI, it could tell you that the momentum is still strong to the downside. But then again, I could very quickly, Karen, look at something like the MACD, which is now looks like the signal line is going to cross back up here. Price is crossing above the signal line. That might be a buying opportunity. So right away you start to get conflicting signals, right? It's like, what the heck do I choose? So, that's the challenge for me. I guess in this case, and I don't want to steal Corey's thunder because again, he's going to do a presentation coming up here. When is your event?
So we have a whole online summit, trader summit. We're calling it Oktoberfest. Why not? Because it's October, right?
I will bring the beer in my lederhosen. We'll do good.
Yeah. We're going to have a cocktail hour at the end for Q&A. But it's something we've been doing since. I think we did our first one in March of last year when COVID hit and everybody was stuck at home with nothing to do and everybody wanted to learn how to make money from home. So we thought, let's do a summit. And so once a quarter, we've been putting on these summits. And here we are. It's our 4th quarter summit, October 8th, 2 days from now, man. So we got a lot of cool presenters, too. It's not just Chuck and I. In fact, Chuck is primarily going to focus on the FusionVesting piece. And I brought in a whole bunch of other presenters that some of them are Traders Army instructors and some of them are not. But we got an incredible lineup of people.
I've got your flyer up here for the viewers. Friday, October 8 and 9 a.m. to 4:30 p.m. Eastern Standard Time. Goodness gracious. If you want people to get up at 6 a.m. Pacific to go, here.
They're up anyway. If they're
That's true. You can find out more information, guys. Just go to tradersarmy.com and it'll pop up there. See if you want more information and check them out. These guys, I've been wanting to do these events for years, but unfortunately, I have other obligations which may conflict and prevent me from doing those events. But one day I will.
Of course it would.
it probably
will. One of these days.
One of these days. Oh boy. All right, what else we want to talk about today? Anything exciting in the options world? I had one question from Lee, but I think we might have touched on it in the past, dealing with the VIX. Maybe we can go into that. But if you guys have some questions for Corey, feel free to send them on out. Again, I didn't want to go too depth on this FusionVesting thing because it was kind of an interesting topic that Corey presented to me, and I know he'll talk a lot more about that on his event on Friday. I'll go read this question from Lee. I didn't get a chance to put it on my slides. It was... Lee says he's new to options. How does the VIX influence your trades? And maybe you can touch on that one a little bit because I know we have a lot of option traders here. Some are just looking purely at the options market, but if VIX may be an influence for them. So let's help Lee out and talk about VIX a little bit.
Yeah. So short answer is I don't use the VIX to influence a single decision anymore.
Cool.
I actually don't trust anything about it.
Wow. You sound like me, a little bit bitter and untrusting.
No. I mean, I guess let me just rewind a little bit. When I'm swing trading stuff and whatnot, I don't really mess around with the VIX too much or VXX or VolQ or anything like that. But there's one thing that I do look for that is usually a pretty good indication of how the day is going to end. Mm-hmm. And that is and it doesn't always happen, but when you see, say, the SPY or ES or whatever, right? If you see prices dropping, but they're dropping and prices are down, the market's in the red, you should see the volatility indexes all in the green. It should be up, inverse correlation. But if the SPX, for instance, is dropping into an area of support or demand that I'm questioning, hey, does this thing look like it's going to bounce here? If I look at the VIX and I see a VIX that's down on a day that the S&P is also down, I would say 8 times out of 10, the market's going to end the day in the green. And it's sort of like it can be a daily leading indication of where things are likely to start turning before the end of the day. And what I have found is, since the VIX is simply a measurement of the actual demand or lack of demand for S&P 500 options, for SPX options, I'm thinking, who in the world has enough money to affect, by their own actual supply and demand, their own buying and selling, the value or the supply and demand of an option on the SPX, right? Who has that kind of money? And that's going to be institutional money, who uses the SPX largely to hedge positions. And so if I see the VIX down, that tells me that they're in liquidation mode on those options. Sell, sell, sell. And it's, yeah, you're right, Patrick. It's kind of like a sentiment thing. Mm-hmm. And it's like, if I see the VIX down, that tells me that options are for sale, and that in a big way, there's more supply than there is demand for VIX options. And so I see that as a very bullish outlook. And if the market's down on the same day, and the VIX is down on the same day, and the S&P is coming into a nice area of demand that I think is probably going to bounce anyway, that VIX can help support that. And whether or not we end the day in the green or almost in the green, get really close, the following day is usually a nice follow-through day on the way up. And I would use that in reverse as well, meaning if the price is coming up into a resistance or a supply area, and I think, I wonder if this supply is going to hold. And I see the market is green. If I look down and I see the VIX and the vol Q and the VXX also in the green, I say, I'm very cautious. I think the day may end in the red, or tomorrow will be red. Right. And more times than not, that's the case. It's kind of a leading indication there.
Yeah, I guess I'm almost hypocritical, because I think that while I like to look at it because it just kind of gives you an estimate of fear, plus I think it has great percentage moves for people who want to get in on it, I don't use it anymore. After our crash many moons ago, go back in 2007 when that thing went up to almost 100, or 2008 when it went up to 100, to me it was broken, and I really haven't used it since then. I look at it occasionally, but I'll be honest, I don't necessarily look at the option or the VIX when I'm trading options either. Of course, guys, you guys know me. I am not a complex options guy. Corey is far more advanced than me. I am a simple sell some calls, sell some puts, covered calls, covered puts, cash secured puts, or just go directional. I don't like to do really strategies because it hurts my head to think of all those different variables. And looking at the VIX just makes it one more step more complicated to me. I'm purely off of where do I think it's going to turn based off of whatever factors I'm looking at, normally supply and demand with some indicators sprinkled in there. So I don't use it, Lee. Sorry. I know a lot of people do, though.
Yeah.
And there's nothing wrong with it.
I find much more value in, if I'm trading options on a particular stock, or even if it's the SPY, then of course you're going to look at the volatility environment on that stock in particular, which may have nothing to do with the VIX.
Right.
Right. So that tells me whether I want to be a buyer, seller, spread trader of those options.
Let's see. Oh, there we go. I was trying to find there your picture. There you go. Now I got your picture up. He looks all rock star. By the way, someone said you don't look like a rocker anymore. You look like a UFC fighter with your beard.
Yeah. And I saw a tattoo artist up there, too. I thought I saw that.
I can see you being a tattoo artist. All right, well, cool. Hey, I know this is totally a tangent piece here. We're going to move away from trading unless you guys have any last-minute questions for Corey. Medic, you said, can we submit questions for the CPA? I'm not sure what we're talking about with CPA.
Yeah, so we have Al Davidson from Pro Trader Tax. He's going to be doing a presentation on Friday's summit. And yes, he's going to have an open spot for Q&A. Unfortunately, he's not going to make it to the end of day. Actually, you know what? Al Davidson is. It's Jared Tendler that's not going to make it to our end of day Q&A, just our roundtable. But Jared Tendler, as more of a focus on mindset and performance coaching and things like that, outstanding. You'll want to catch his presentation for sure. Jared Tendler. But yes, Al Davidson will be open for questions. He'll give you his personal contact information. So if you want to get more serious about that kind of stuff, he's really great about providing a lot of great, I guess, service, because it's CPA and tax stuff, right? So service and advice, and
sure,
he's a wealth of knowledge, and he's a trader, so he understands both sides of it.
Yeah, that's the important part, is you got to be able to understand the business that you're discussing. Let's move, and I don't see any last minute questions, so let's move away from trading for a sec here, Corey. I know you're pretty active with your Rockstar kids doing their band stuff all the time. When do I get to see you play again?
That's a great question. I am not in a band these days. All my bands I left in Florida, and so
they're just smoking bath salts and creating havoc down there. You're out in California, we're a little more sane. Is that the deal?
I don't know what it is. Well, you know what? I don't know. I teamed up with some musicians out here, and I do a lot of writing for television. I do a lot of writing, trying to get into more movies, but mostly television right now. And
like The Bachelor, like that type of thing.
Like The Bachelor, yeah, exactly.
Bachelor in Paradise. These wonderfully, what my 600-pound life. That's your script writing.
Yeah, that's all me. Actually, all my stuff is all Discovery Channel stuff.
Oh, okay.
It's mostly around. Like one of my friends, he builds cars, and he has a couple shows on Discovery Plus, and so I teamed up with him to start writing music for his shows, and that's great. But it doesn't really leave me a whole lot to really go out and play. And my days of going to clubs and hanging out till 2 a.m. and I don't know.
All right, fine. I'm a little bit bummed. I kind of
these days. I do miss that though, Merlin. You're right. I do miss playing live. You never know.
Hey, one of these days I'll let you know when I have the jam session at my house. We can set up the drums in the living room. I got plenty of space. So.
Oh no, that would be fun. That would be fun.
Let's do it. Let's see what else. There were a couple questions came in. If I can't attend live, where will the recording be for Critters?
So the recording is going to be, you'll just have to register for a free membership at Traders Army unless you already have a pro membership. But a free membership will get you into our free trading videos, which is where I'm going to post the recordings for all the summit presenters. And so what I would like to see you guys do, because I'm going to send out information, is even if you are not planning on attending live on Friday, at least register so I can get you on that particular email list, and I can send you the details when the summit is posted. I'll give you a direct link. It's easy to get registered to watch it. It doesn't cost a thing to watch it recorded or hang out with us live all day Friday.
Cool. Sounds good to me. Last question came in from Margaret. Margaret says, do you exit option trades based on zones being broken?
Depends upon the option trade. If it's a directionally biased option trade, yes. So any kind of buying calls, buying puts, debit spreads, things like that, whether it's vertical or diagonal, yes. If it breaks the zone, I'm out. Selling puts, not exactly. There's a lot of ways to be right when selling puts or selling calls or call spreads, put spreads, iron condors. So what makes us wrong in those trades is the stock violates the short strike. Right. Anytime you sell an option, Merlin, you're right until your short strike is violated.
Yep.
And if that short strike is violated and I don't want to take assignment on that option, then I'll exit.
Right.
If it doesn't break that strike, then there's no way I'm going to get assigned, and I'll just stay in. So it's much simpler when selling options to define where my stop goes.
Yeah, and for Margaret, again, we all do things slightly differently, but for me, when I'm selling puts, I don't particularly care if the strike gets violated personally, because I'm already saying this is a level I'm willing to buy it at. If I'm going directional and I'm basing it off of some supply or demand zone, yeah, I will exit based off the supply and demand zone breaking. So.
Right. Yeah, and that for me just goes for when I'm selling puts. If I don't want the stock,
right,
then I'll have to exit if it violates. But if I do want the stock, then you're right. I don't do anything.
Yeah.
Just see if I'm going to get put the stock or not, or see if the stock's going to get called away or not.
A good example for that, Margaret, was a couple weeks ago on the expiration of the September silver contract. I had sold some puts. Had a nice rate of return on it, and I had a number I was happy owning silver. I got exercised. I could have exited before the exercise, so I wouldn't take it. But I was like, you know what? I'm fine with it. So I'm long the silver, and I'm selling calls against that, and we're collecting more premium, even though it's just kind of struggling sideways right now. So there you go. Can you provide the details of Corey Lane's trading site? Jerry, it's not really a trading site per se. It's over here. You go to tradersarmy.com. If you go there, this little window will pop up for Oktoberfest. That's their event happening on Friday. But if you click off there, you can find all the information you need to know about Traders Army, their staff, etc., and all those other things that they'll be doing on a regular basis. So. All right, Corey. Well, thank you. I appreciate you coming on today, taking your time out of your schedule. It was last minute notice. You can actually thank Tom for this one. Tom is one of my regulars out here, and he was like, "Hey, you got an event happening on Friday. Let's bring on Corey." So you know what? I have not been reaching out to people as regularly as I should to get them on the show. So I'm glad that you took the short notice to come on the program. I always appreciate it.
I love it, man. I love it. I don't have time to go play drums in a rock band, but I had time for the Merlin show.
Perfect. Well, if you had a jam session that was only for 42 minutes, it'd be a different kind of night. But I appreciate you jamming along with us today.
I love it, Merlin. Anytime. I love hanging out with you, man.
Awesome, man. Well, thanks so much. I hope you have a great event on Friday. Talk to you soon.
Awesome. Thank you, sir. Enjoy your day. Bye, everyone.
Guys, Corey Lane of Traders Army giving us some insights into FusionVesting. FusionVesting. That's what it was, yes. I like it. It's an interesting concept, and if you look at, I think all of you are, to some extent, doing that, regardless of where you've taken classes in the past. Doesn't matter whether you read a book or, you took some seminar somewhere. We all start to learn a basic strategy or a philosophy about trading and investing. And then what I like about Corey's approach and what he's going to talk a lot more about on Friday is, ultimately, not one strategy is right. I mean, there isn't the perfect strategy. They all work to some extent. It's about knowing when they don't work. And I personally believe, at least for my trading, that as soon as you can take these things and layer them on top of each other. And at a certain point, you start to build a better strategy, right? You build a better mousetrap if you take certain pieces from this one and certain pieces from this one. And for me, the most important part of that is you cannot and you should not ever listen to somebody at face value for what they say. For example, if I was to sit here and tell you, hey, this is the best way to trade, this is the only way to trade, you should stop right away because I'm trying to manipulate you most likely into buying something. Now, if I was to tell you, hey, look, I've used this and I use these tools and they help me, here's how you use them. That's more important because you have to be able to understand when something doesn't work. And you guys have heard me over and over and over again talking about the emphasis on going back through your trading plan, seeing what worked and what didn't work. And that includes, if you're using moving averages, cool, right? But are they working for you? If not, why aren't they working? And how might you be able to modify those or remove them from your trading altogether? If you're using CCI as Corey did, he's not using it the conventional way. So how did he figure that one out? He started tweaking it and modifying it and using it to fit his goals and objectives. And now he's got something that works for him. How does he know it works? Bottom end results, right? If you track these things, and again, we are all business owners. Some of you aren't, right? Some of you are just going, I'm buying this stock and that stock because I heard about it. That's okay. But from my perspective, we are business owners. We run trading businesses. It's what we do. So I have to be responsible for business operations. And if I realize that something's costing me money, I need to fix that. If I realize I'm making more money somewhere else, I need to go do more of that. If I realize somebody's shoplifting from my store, I need to get a Smith & Wesson and just point it at their head every time they steal. Just kidding, we're not in Texas. You need to find out what you need to do to make your business better, and if that's including different pieces and tools and tactics that somebody like Corey uses or Chuck uses or Brandon or myself, great, try them. Right? Don't poo-poo it and be like, oh well, that's a stupid strategy. I heard that indicator sucks. Well, it might suck for somebody. It might be great for somebody else. All right, let me see here. I went through a whole bunch of goodies, but I want to go into what's happening for tomorrow. Brendan says I vend crypto magic. But we are seeing some crypto magic right now. An old Bitcoin, right? Keep that thing rallying. Nice move. We're right back up those highs from earlier. Love it. I want to show you this for tomorrow. Go to that one there. Perfect. So here's your economic calendar for the 7th. You can see that there are a couple announcements coming out for the U.S. None are like, I guess, over the top crazy, but people will be focusing on the unemployment numbers. The ADP non-farm employment change that came out today was great. Those numbers were much better than expected. For those who might not have seen or been paying attention to that, the ADP non-farm employment numbers for the U.S. were showing pretty good job expansion. That was I'm trying to get the exact numbers there. Now I can't find it. You also have there you go. It's 568,000 jobs were created. They were expecting 425. So huge pop up in ADP. That most likely will show a better than expected unemployment claims number, but obviously right now employment is pretty critical because the Fed has been talking about that as one of their barometers for it's their dual mandate, right? Full employment. Well, as this number continues to slow down the unemployment claims, that's obviously a sign that the Fed may taper sooner rather than later. You have consumer credit coming out for tomorrow. The real exciting piece, actually, last night, I don't know if you guys saw it, was the New Zealand dollar. There was no expectation of a change, and then right near the final hours, the expectation jumped to them raising rates. That's right, you don't hear too much about people raising rates right now, but the talk track was, and they finally did it, they jumped from 25 basis points to 50 basis points, which for me is pretty important. It's the first, kind of major country out there that's saying, hey, we're going to start raising rates. Now, what was interesting about that, and I'll show you the price chart here. Let's go to NZD/USD, is normally, before I hit enter, I'm going to ask you guys a question and to get you guys engaged. When you, if your currency, if they raise the rates on your currency, what should happen to the value of your currency? All right, just curious what you guys think that the answer there should be. The raise rates to a currency, what should be the result? Like if I'm holding the dollars, the Australian dollars or New Zealand dollars or US dollars, and I decide to raise the rates on the US dollar, interest rates, what should happen there? All right, let me see if I can bring this chart up for you. Normally, if you raise rates, dollars or your currency will go up. And the reason for that is now people will look to the Forex markets to buy your currency because now they can make 0.25% more by holding the New Zealand dollar. So you would think, right, David, that it's going to go up. Well, notice what happened here. This is where everything works until it doesn't. This is your New Zealand dollar. They raised interest rates by 25 basis points, and it was a pretty much nothing but down day. Right? It was very interesting to see this pop to the south side. So, but I'll tell you what, if I was trading New Zealand dollar at that moment, I probably would have gotten my clock cleaned because I would have thought this is going to have a nice spike to the upside. And I'm not exactly sure why. Maybe this 3 days before was the everybody was on the know, figured it out and jumped in there. Yeah, usually goes up, but this one went down, Jerry. Kind of strange the way that one worked out. You also had AUD. Now, the Aussies didn't do anything with theirs. They kept their rates right around the same number, so that wasn't the big surprise, but I thought it'd be worth to share the New Zealand dollar, which in fact did raise their rates, which was kind of surprising. Right now, everyone seems to be just kind of holding the course. The Australian dollar staying at 0.1% with no real change there. That said, what I got for tomorrow also, earnings, nothing really exciting. You have Tilray. I know we got some cannabis lovers out there. I guess I can bring up, here's the list of companies reporting earnings tomorrow. So you got Tilray, Lamb Weston, and ConAgra Brands. So let's look at Tilray real quick just to get a peek as to how it's doing. Ooh, this is like the sinking submarine song right here. God, it just looks really bad for Tilray. At some point, this will be a buy, and I may actually look at MJ, not necessarily Tilray, at some point, but right now, it's just trending lower. Let's go back to MJ, which is our ETF that represents that whole sector. This does not look good, folks. It's just been drifting lower and lower and lower, and we're sitting right at a demand zone right now, and we're really right on it. I'll zoom out even further. You guys can see we've been smacking our head on this floor, or I guess your feet on the floor, right around 14.25. So, if that one breaks, you got a quick drop right down to, looks to be right around 13.50, and then all of a sudden you got some unfilled gaps to go all the way back into, looks like 2020. But yeah, not looking so good. But Tilray reporting earnings tomorrow, ConAgra Brands and Lamb Weston. All right, yeah, Brendan says, I'm loving the value in cannabis. Loving it too, but boy, you remember, how low can it go? Right? It could keep on going lower and lower and lower, and unfortunately, there's that phrase for a reason. The markets can remain irrational longer than you can remain solvent. And even though many of us here today think that this is a great industry and great sector, it doesn't look like it's faring very well right now. And there you go. Yes, Margaret, that would be a carry trade, right? If someone is buying a higher value currency and selling the one that has a zero or negative interest rate. So if you were in the New Zealand dollar, Japanese yen, right, it was 0.25 for holding the New Zealand dollar, and then you would earn 0.1% by selling the Japanese yen. So that's 0.35% there. Well, now it just jumped up. So now you've got 0.6%. So if you're holding the New Zealand dollar Japanese yen pair, you're actually making more money right now. All right, guys, that's going to do it for me. I'm glad we had the last minute addition to get Corey on. Tom, thanks so much for bringing him on or suggesting that. I appreciate it. Tomorrow I will not have a guest. I got a few questions that you guys brought in here today that I will do my best to get into. I'll run through the chat here at the end just to make sure I can get all those. If you have something I did not get to, you want me to dive into it deeper or maybe make a topic for tomorrow's show, send it on in at TraderMerlin@gmail.com. That's the easiest way. TraderMerlin@gmail.com. It's on the screen. Or just put your comment down below the YouTube video, and I will get to all those questions on our Thursday show. Should be an exciting one. All right, guys, that's going to do it for me. Hope you guys have a fantastic remainder of your day. I'm expecting a very volatile Thursday as well, given the way these markets have been moving. Boy, these swings have been great. Some good opportunities. We'll see what pans out for tomorrow. See you then. Take care.